Over the last month, we've had a lot of talk about interest rates and inflation and how that's impacted the housing market. And in fact, just a few weeks ago, we brought you some graphs and data that showed that a lot of the forecasts for predicted appreciation on home pricing had been marked down for the coming year, meaning we were expecting less appreciation over the coming year than was originally predicted. Is that still the case? Is that the sign of the housing crash? Has it finally come? Well, not so fast. Stick around, we're gonna get into this today. Hello Central Maine, it is your realtor Nick Isgro with eXp Realty. And as I just stated at the beginning, today we're going to talk over some exciting news, or some very interesting news at least, about some revised forecasts for housing appreciation. Now, before I get into that, I do want to let you know that, of course, if you are looking for a realtor in Central Maine, if you're looking for someone who can talk you through from start to finish, whether you're a buyer or a seller, whatever situation you're in, all of my contact information is in this link below. Please do click on it, contact me by any method that is most convenient for you. I promise to get right back to you. That said, if you've never been here to the channel, I want to welcome you here. We do cover all things real estate here in the state of Maine, particularly in the Central Maine market. If that's of interest to you or adds value to your process in the buying and selling of homes, or just navigating the real estate market here in Central Maine, do me a favor. Go ahead and like this video, hit the subscribe button, knock the little alarm bell. You'll be notified every time we put out new content. So over the last couple of months, we've been continuing this conversation about the rise of interest rates, which we are predicting are going to continue to rise as inflation continues to go up, and generally the effect of inflation and how this is all playing into the housing market. And in fact, what we've seen is a dampening a little bit of buyer demand in the market. We know that home showings are down from over the last year, and that has also caused predictions of the home appreciation, that is how much the home is going to appreciate over the next 12 months, to be fairly modest. In fact, the most recent time we looked at it was about 2.7%. That's a far cry from what we saw in the last couple of years over the pandemic, when we were in that kind of pandemic mayhem and the market was a lot crazier than it is right now, when we look at both buyer demand and the super low inventories. And that has caused the predictions to be a little bit more moderate than they were over the last couple of years. Well, what's going on? Is that the sign of a housing crash? Because when I'm out there, a lot of what I hear, and you guys probably hear it too, you might even be thinking of it as well, is, you know, maybe now is not the right time to buy. I think I'm going to wait till the housing crash. It's a big bubble. It's about to burst. A lot of these dire warnings. Well, are they true? Well, one thing that we've been pretty consistent with here on this channel anyway is that we don't think so. In fact, what we've seen is that there's been a moderation of the housing market. We've seen inventories come up to really pre-pandemic levels as we're coming back, and that means the buyer activity has been slowing a bit more to pre-pandemic activity levels. And even that was a great seller's market to be in. It was still a hot time. Interest rates were still advantageous before they went rock bottom. Now they're just a little bit less so, but really, if you look over the last 10 years, they're fairly average. You know, we're talking about 5.25% on the interest rate. Not really bad, all things considered, when you take the entire history of mortgage rates into consideration and don't just look at the last couple of years. Now, with buyer demand softening and us seeing a little bit less traffic into homes and the rising interest rates, does that mean that prices are going to go down if this continues to happen? Well, the experts don't think so, and this is going to get really interesting. While in January, most of the forecast for home appreciation was fairly moderate and modest, anywhere from 2.5% up to around 7 or 8%, the most recent numbers that have come out show that all of the big names are actually revising their predictions and driving those numbers upward, which means that they are predicting a much higher appreciation than was originally predicted as we're moving through this changing housing market. I want you to take a look at this graph that I'm going to bring up right now. As you can see, Fannie Mae, Freddie Mac, National Association of Realtors, and others have all revised their predictions of home appreciation to go from single digits up into the double digits, which is really what we've been experiencing over the last couple of years. How could that be? How could it be that we've had higher interest rates, a softening of the demand in the buyer's market, and more inventory coming to market, but prices are still going to go up? Well, the same problem that we've been talking about for the last 12 to 24 months, and that is supply and demand. What we are seeing in the market is that although inventories are coming up, they are remaining at record lows when you look at the history of housing supplies here in the United States, here in the state of Maine, here in the central Maine market. While mortgage rates have dampened that supply a little bit, demand is still outstripping the supply on a regular basis. That's still continuing to happen. Remember, a normalized market is 6 months of inventory. We just hit barely over a month of inventory in the last month in the market. Combine this with the fact that there is very, very little new construction going on comparatively when you look over the historical analysis of that, and millennials forming in very record high numbers, strong household formation. It's creating a situation where this demand continues to go on, continues to build, and continues to outstrip the supply that's on the market. So if this is all happening, when are the home prices going to come down? Well, we really don't know when they're going to come down, but it looks like from this data, experts are fairly confident that it's not going to be anytime soon, that the homes are still going to go up. So for you buyers out there that have been sitting on the sidelines or are in the market right now, wondering whether you should stay in or get out, maybe this isn't the best time, maybe this is a good time, well, if you're buying now, one of the things that we always say is that you want to date the interest rate, marry the house. And that's really important in a market like this. And what do we mean by that? Well, what we mean is that the interest rate is temporary. You can always refinance down the road, but getting your home now is going to secure you into that fixed payment now. It's going to allow you to start building that equity now in a market that is expected to continue to rise over the foreseeable future. And when rates go back down, you can always date a new rate and refinance that down to the lower rate and the lower payment. So that's what we mean when we say that. If you're a seller that's in the market, or you're a seller that's been thinking about it and you're like, well, maybe I missed the boat, doesn't look like you have. Looks like this is going to remain a good, strong seller's market for the foreseeable future. But it does mean that as we look at the numbers and as we looked over the last month with an increase of inventory, you are going to have a little bit more competition. And that's why we recommend working with a professional who's going to be able to help you really stand out above the rest of the competition when it comes to showcasing your home, marketing your home, and making sure that you get the best available price for you. That's it for today, guys. Just a quick video. I thought that was very interesting information. And as always, as new information comes out on this emerging market and the changes that are going on, I always want to bring that information to you so that you can be the best informed on the market, to be the most prepared that you can possibly be. If you are in the market right now, if you've been thinking about getting to market, please go ahead, tell me what your experience has been. Go ahead and drop a comment below. As always, I thank you so much for sticking around to the end of this video, and until next week, see you next time.